Hi, hello everyone. Welcome to this panel where we will discuss legal risks in the blockchain field. So the objective of this panel is to go maybe a bit deeper than the usual legal presentations about blockchain and legal risk and everything. We will discuss with people who are actually working with companies that are facing the legal risks in the blockchain field, or people who are in-house in these companies. So we will uncover, maybe try to make a small overview of how, in practice, a blockchain company can identify its legal risks and how we can manage it, reducing them or eliminating them when possible. Just to introduce myself, I'm Simon Polrot. I was a lawyer for 6 years before I quit my job as a lawyer to join Variable, and which is actually a blockchain company. So I have a vision of both sides of the way to look at the legal risks, and I will be interrogating my fellow law practitioners here. Each of them will introduce themselves in a few minutes, and then we'll begin with the questions. So first, Primavera De Filippi.
So I have the chance not to be a practitioner. So I'm Primavera De Filippi. I'm a researcher at the CNRS, and most of my research is actually about the legal implications of blockchain technologies, both in terms of what are the regulatory issues that it raises, but also as to how we can actually use the technology as a form of regulatory technology in order to somehow achieve specific regulatory objectives through technological means.
Hi, I'm Arnaud Grunteller. I'm a partner from Phil Fisher Law Firm in Paris. I have a background of banking and regulatory matters in finance, and I'm dealing for almost more than 2 years on cryptocurrencies issues in France for service provider and also for ICOs under French law. I'm a member from the France Stratégie working group for blockchain and also from finance innovation on the matter.
Hi everybody, I'm Ryan Nixon. I'm general counsel for MyCrypto. I've been in the crypto space a couple of years, maybe 6 months working with MyCrypto. I initially was exposed to blockchain companies, crypto companies, working with Boost VC. My background's in corporate law in the US, and yeah, it's been quite a ride. Thank you guys for coming out. I know it's late on a Saturday.
Hi, I'm Claire Pion, and I work in consensus, and especially for the Variable project, on all the legal and compliance questions. And I have a background in financial and corporate law, and I try to help Variable to solve the many problems we have with regulations.
Thank you all. So I will begin with maybe a general question with the people who are actually working in-house in blockchain companies. So what would you say, what are for you the most significant risks that you have identified for your company, and how, if you have been able to do so, how did you manage to cover them or mitigate them?
Yeah, so I came into contact with MyCrypto at an interesting time. I met Taylor, my boss right there, the coolest CEO. That's my mama right there. I met her at a Boost meetup. I would have office hours working with startups. They have a litany of questions and founder disputes, protection of IP, crypto and non-crypto related, and they had a particular issue, a founder dispute, and while Taylor may not be able to speak on it, I can give some details. But her company was growing, very quickly, and they had a little bit of an issue with some dead weight and a dispute, and so my role up front was to kind of figure out this complicated situation, you know, to free her from this company without, you know, any litigation. So it was an interesting kind of jumping into the fire with my first company. So to answer your question, you know, I think prophylactic measures are important, but sometimes you just got to get in the trenches, and that's exactly what happened with the hard fork from my Ether wallet into my crypto.
I think it's invariable. It's a bit different because when I joined the project, it was just a research project, and most of the startup in the blockchain ecosystem does not anticipate any legal risk or anything, but they work on a financial project, so with many regulation. And in this all blockchain ecosystem, everything is very a gray zone because we don't know what are the rules. Most of the regulator or the lawmaker didn't make any decision yet. So I think our way to process was to start to discuss with some external counsel for having their opinion, and try to talk also with the regulators and lawmakers for maybe making some education first about what is blockchain, and try to discuss with them what could be the rules and what could be the frameworks.
Okay, so we have maybe two very different approaches, where maybe in one company we have like more legal debt that you just had to manage when you arrived, and then move forward as good as possible, and maybe in variable it was much more anticipated because as the company is dealing with financial products, maybe it was more obvious that the legal risks were significant. I will ask maybe those who are not dealing directly with those companies. In your opinion, have you seen that the companies are more likely to anticipate those risks, and do they ask you questions too late or too early, or do they want to discuss? Maybe you are managing Primavera, a few. The Koala working groups on the legal issues about blockchain. What's your general sentiment on this? Do those people, do the blockchain practitioner want to anticipate the risk before, or do they just identify the risk by creating the product and then they try to manage it afterwards? Maybe that's, how does it work?
So, from my experience, I can talk from two specific experiences. Which one is Koala, which is essentially a network or a community of researchers, lawyers and entrepreneurs and engineers. And the Koala network, actually, we anticipate. So we identify which one are the pressing issues that need to be resolved in order for companies or projects to actually be able to operate in the existing legal framework. And we try, in a collaborative manner, to actually identify practical solutions to that. So in the role of Koala, we're really, I will say we are kind of like at the avant-garde. We're identifying the problem and we're starting to think about it before those problems actually become a reality. And ideally, we have like a prototype of an answer that we can then propose to different people that might want to implement those systems. And then from a more research perspective, so we are also working with the Blockchain Research Institute. And this is more different because the members of this consortium are actually companies that are more like the legacy companies, so that want to understand how to use the blockchain-based systems, but are not yet, they are not yet implementing these, and they are not yet experimenting with those technologies. So in this way, it's actually more. You can see that there is a lot of eagerness to understand what can be done and what cannot be done, but my impression in this field is quite reluctant to actually experiment until an actual proper and definitive answer. So until we figure out this gray area, it's much more difficult to jump in. Whereas within the Koala network, where we're actually in touch with a lot of blockchain-based projects, so startups that are actually inherently and born within the blockchain DNA, they are actually much more eager to not just experiment, but really just to deploy, even though the regulatory framework is not clear yet.
I have both experience because I've seen very serious people who are coming at early stage because they want to sleep at night, and then giving the uncertainties of the regulatory framework, they want to be sure that there is no criminal offense or there is no breach of any existing regulation that product may face, and then they are going at very, very early stage to try to mitigate their risk and operate properly, giving the regulatory risk, the consumer law risk, legal risk, technical risk. When you are trying to promote an ICO in France, you are facing all the risk. You have to discuss with the regulator only if you want to, and then you need to have, well, you need to be confident with your legal background, which is not very easy. And then you can assist as a lawyer this kind of projects at early stage properly. But you also have people coming and see you and saying, okay, I'm going to finish my ICO next week, okay, and then what can I do? Okay, then it is very difficult to give them a comfort for the past. We try to organize them so that they comply with the best practice which exists in France for these kind of projects. We are not going to find real solution and mitigate all the risks for the past, but to try to accompany them and give them the maximum of comfort, but it is not the best way to come at the end of the ICO saying, oh, perhaps I have a legal or regulatory constraint, or perhaps my token will fall under a regulated activity or a regulated product. This is really something, whatever the advice, internally or externally, advisor, you need to anticipate this.
Okay, and in general, do your client actually follow your advice, or?
Yes, because we have very serious projects. No, the problem is, given the regulatory uncertainties, you can have people saying, I'm not obliged to do that. I don't have any regulatory framework saying that it is mandatory. I said, yes, but if you do not follow the best practice, the step to be compliant in the next future will be very difficult to manage. And then, even if you don't have any regulatory framework, you have the legal liability or legal responsibility because you are going to sell something to someone, and you have to take the cryptos of the saver, and then other rules may apply. Most of the time, we have people who are very keen to follow these best practices. When constraints are too strong, they are reluctant to follow some of the rules or some of the guidance. For example, when you have a multi-sig wallet, and a best practice will be to provide a key to an external independent advisor who will provide with post-ICO audit, and then use the key if the project is running and deployed properly. They are very reluctant to say, I don't want to be the next Tezos, you know. I don't want to be blocked because I have someone with one key. But this is something we need to discuss, because we are going to run, and the regulator is going to run more and more compliance on this. So most of the time, almost all the best practice are complied with. Well, in the projects I'm assisting, and I'm not assisting all, if it is not serious at all, we are not assisting them. Because if they do not understand that we have to protect the servers, if they do not understand that they have to protect themselves, we are not going that way. And then it is the better for everybody to follow the rules.
Thank you. Thank you very much. Yeah, thank you very much. Maybe I'll follow up with. There is a trend going on right now where the regulators and the legislators in general are more interested in cryptocurrency because of the ICO boom and the boom in the cryptocurrency price in general. and it's something that has begun for certain amount of time in certain countries, but is very new in other ones. In general, would you say that the regulators are really willing to understand what's going on, or do they have, in general, an approach that is highly risk-driven, and which is the antithesis of going into into a very innovative space? What's your general feeling about that?
I mean, yeah. So I think especially in the States, the regulators are very interested in cryptocurrency, and they're very interested in regulating it. It's kind of a chaotic time when, as council, what do businesses want? They want some sort of predictability, right? Like, we have to give them some sort of assurance that they can set this up, that they can issue an ICO, that they can, take on, venture capital financing, and there's no big liability hanging over their head. And it's very challenging. I think it's, two things, to stay on top of regulators, see, how that applies. For example, with my crypto, the SEC just issued, news that, like, exchanges should be registered. Well, is my crypto an exchange? No, we're not. But I mean, we do, switch out for different, cryptocurrencies. So does that warrant maybe a deeper look? Yeah, I think so. So it's kind of having to comply, stay on top of regulators, and at the same time not be a blocker, because I mean, we are a startup at the end of the day, and my job is to always be on top without being in the way, and that sometimes is a hard balancing act.
I think in France, the regulator and the lawmaker is very interested by blockchain and all the issue around it, and with a real intention to take care of these problems and of these questions, creating like several departments in the different regulators to take care of these fintech problems, and also some information mission in the parliament. I think there is two big blockers. The first one, it's essentially also a political question. So everybody is a bit waiting for what will be the political position on these questions. And the second one, we're part of the European Union, and I think lawmakers are a bit in the expectative of what position could be the one of the European Union, and what will be the framework at the end made by the European Union. And they know that even if they try to create some rules and some frameworks, at the end, the decision will come to the European Union.
I will say that working with the IMF, I'm not part of the IMF, so I'm not talking for them, but working with the IMF, they are quite balanced, because their role and duty is first to protect the savers. This is their mission. However, they are very open-minded on the matter, because they need to understand what you are doing. And because they need to understand what you are doing, their door is open. You can present your project. You can have meetings explaining what you are doing. They are very keen to understand. They make their own knowledge on this, hiring engineers, working with technical groups. And when we see the potential regulation which could be implemented in France, it is not a ban of crypto, of ICO, like we have in other countries. We don't have any kind of very strict AUI tests like we have in the United States, where 99% of the token could be security. We have their kind of tests, but which is, I will say, more balanced, and the contemplated framework and regulation, which could be potentially in the future, if it is voted, could be obtaining a kind of approval for ICOs which will comply with the best practice, but not necessarily make a ban on the others. Simply saying, for the others, there is no approval from the IMF, and then there will be a warning on this, but it will be potentially possible to subscribe in France. And for the others, it will be a good marketing argument to say, I am compliant with the IMF requirements. and then I'm following the rules, you could be more confident on my project, which I think is a very good, if it is confirmed, it is a very good balanced position where it is not so strict. You can hire in France the best projects, and it is not a ban like we have in other countries.
Yeah, so from my experience, I think the regulators are actually quite open to understand and to try and provide the proper regulation. I think the problem is, especially in the case of ICOs, is that they are in this really delicate situation in which, on the one hand, they need to regulate something that is an innovation and to understand how to actually promote those new possibilities that emerge, while at the same time they also need to deal with the thousands of scams that are actually happening on top of this. And it's really difficult because obviously you need to focus on the scam first, and then it becomes really dangerous or delicate to actually create a regulation that promote this technology without actually covering all the possible negative effect that comes from the people that are trying to abuse this regulation. And from talking with various regulators, both in Europe and in the US, oftentimes they actually just literally say, it's really difficult. It's much easier to just stay within the existing status quo, because then no one really can blame you that you didn't do a mistake, you just didn't really change anything. Whereas actually providing a change and then seeing that this change, which maybe was very well substantiated, but then is going to be abused because people will figure out where is the loophole or how to actually divert it in order to then use it in order to do some scam or some frauds, then they are actually putting themselves on this very delicate situation in which they are the one that proposed this change. So there is this kind of inertia towards trying to change as little as possible and just trying to cover the potential damage that is emerging. But that's not from a negative standpoint. I think it's more based on being very careful as a regulator in order to preserve your job and in order to protect the public.
Yeah, so there's a balance between actually trying to protect the investor and doing it the right way. So you need to take your time to really understand what's this new technology and what's going on exactly. Oh, yeah, do you want to?
There is a last thing. When you are going in front of the IMF, for example, when you are explaining your project and the structure of the ICO you would like to launch, you can obtain a kind of advice on this best practice with the regulator. It's just not, okay, it is your own liability, take care. It is, if you want to discuss about volatility, if you want to discuss about liquidity of the token, if you want to discuss about the hard cap, the soft cap, if you want to discuss with the functionality and this kind of French test we can have, you can have this discussion with them, which is, I think, a very good idea, not to obtain a kind of approval, because there is no approval so far, but just for you to see where you are under a French regulation and the best practice on the matter, which is, for me, a kind of open-minded of the regulator.
Okay, and maybe I have a question for you. Have you already had a client that was building a completely decentralized system, or is it always clients that have, an ICO is fairly easy to locate the place where the ICO is conducted, either it's where the people live or the company is implemented, but have you already faced projects where it's actually very difficult to see if there is a way to identify a risk for a regulator, and if so, where it is located?
Full decentralized, at early stage, it is always a kind of ERC20 on the Ethereum. After it, there is a fork and potentially a full decentralized. This is on the second stage. This is not the kind of discussion we could have. This is something which could be discussed, but they are more focusing on the way the token are going to be offered, because the protection of the saver is linked to the purchasing of this and how it is structured and what will be the information provided. After all, in some exchange, you have discussion about, are you facing a regulated, I will say, traditional activity? And there you could open another discussion saying, when your exchange will exist, if it is full decentralized, okay, are we dealing with a banking operation, a banking transaction? Can we say that the implementation of such innovation, of these new techniques, will fall within a classical investment service, for example? Because we try each year to categorize people, saying, okay, what do we know? Where are they going? Do they fall within something which is already known, or do we have something so new that potentially we will have to create set up a new regulation? Sometimes it happens, but it's quite unusual.
Okay,
variable perhaps.
Yeah, well, variable is not really decentralized.
But I think to answer your question, I think there is one example which has happened, which was the DAO, which indeed qualified according to SEC as securities, but then the question is, who was the issuer of those securities? So, of course, we can claim that Zlockit was responsible for this, but if you design the model, and in fact the DAO was deployed anonymously, so nobody knows who actually deployed it. So we can actually imagine potentially deploying an actual smart contract that will create its own issuance of token, and those tokens might or might not qualify as securities, but even if they do qualify as securities, then the question will become who is actually to be held responsible for the issuing of those tokens. So in the case of the DAO, there was obviously a clear correlation between the Zlockit that developed everything. But if we really imagine a more open source system where there is not one single entity that is really promoting and that is like contributing in the development at least of the structure, then we actually have this quite interesting question. We might have the issuance of securities, but it might be very difficult to pinpoint exactly who are the actors that might be considered to be the issuers of those securities.
So if I understand correctly, most of the clients that go and see the actual lawyers and practitioners, they have already a risk identified, and well, they are actually developing an activity by themselves, and they don't consider themselves deploying a service on the Ethereum blockchain, and then just it's completely centralized. I'm not responsible for this. They won't look for a lawyer if they do this. They will just do it and see what happens. And the clients you have, the typology of clients you have, is more people who expose themselves in some way by deploying an ICO. Most of the times it's an ICO, an exchange or something like that, where you can easily identify the person who deploys the activity. So maybe I will switch to more practical questions. Like that's a very broad question, but have you identified a general trend in the projects you've seen or in your own projects where a country or a group of country would be like the place to be to deploy a blockchain project? Is there a trend going through a country in particular, or I don't know.
The problem is often it is not only legal and regulatory issues. A lot of projects are tax driven, and we must admit that France is not the paradise in France in terms of tax, and when you have to apply VAT and some other tax, you say, okay, I have 50% of what I gain during the launch is going to fly away. This is the kind of question we are facing. It is because we can deal with the legal issue. Also, we have some uncertainties on the consumer code, where you have to deal with withdrawal right of the clients, when you have to deal with contractual information, when you have to deal with jurisdiction rules. Concerning the regulatory constraints, there is no one so far. There will be in the future, but this is something which can be managed. If someone with a project said, okay, French is great on a regulatory or legal point of view, but on tax point of view, it's not very attractive. But we cannot fight against that. We can transfer the message forward, try to do lobbying, saying we could be more attractive on these tax issues. We know that other countries are much more attractive on the tax issue, but less potentially on the regulatory one, or they are considered not so secured. We know that Switzerland is very, very attractive because of the tax issues and also because of the regulatory framework. They already have something. The FINMA is very proactive on this. I don't know. I could say France is attractive, but someone is going to say to me, yes, but tax is so painful. I try to sell France, you know, but I do my best. Sorry.
No. Yeah, and you know, I think you know, Singapore with their kind of like sandboxed, you know, where so Singapore has this framework where you can, you know, release a product in this like sandbox, this experimental kind of relaxing of regulations or lessening of them to see, you know, like what works, if something should, you know, does work, and based on whatever that, the results of that experiment, you know, that may impact, you know, legislation, reducing a law, you know, taking a lot, like some regulations away. And I think, at least in my opinion, you know, blockchain moves very fast. Legislators move very slow. And, you know, I mean, until, you know, the space becomes a little more mature, I think it's hard, you know, case by case basis.
To follow what you just say, I think there is many small countries where it's easy to speak with the regulator. Or to some country like Gibraltar already have some regulated framework, and I think many small countries, Estonia, or it's easier to find a compromise and find a framework, and it could be attractive. But of course, for a reputation question, it's maybe less good than France.
Yeah, and just to piggyback off that, like, you know, I've done a little, you know, ICO advisory stuff, and you know, people come to me last minute and say, oh, you know, here's the SAFT, and here's our, you know, our white paper and all that. Here, you know, we're doing it next week. Like, literally, I've had a similar situation, and I politely declined that one. But you know, at least on my side, you know, you can ICO in, you know, the Caymans or, you know, the British Virgin Isles, but like, you know, are you building a business? Are you just trying to ICO and money grab and get out of there? You know, I mean, people will be like, London Bridge is falling down, you know? Like, I mean, so I think that's another thing that startups need to consider. If you do an ICO there, I mean, what are your partnerships going to look like? Everybody's going to question where you set up, you know, where you launched it.
Thank you. I'll finish with one last question, and maybe we can ask questions in the public. One last question. Given the unclear nature of the regulation right now, and the fact that the regulators, you said it just before, are slower to move forward than the actual projects, what would you recommend? Would you recommend that you need a formal validation for the regulator and just postpone your launch, or would you just recommend to do the best you can to be compliant in some way without having the stamp of the regulator and then move forward?
It's a complicated question, right? Because, you know, blockchain technology, you know, digitalizing of any asset, that can be a physical asset, you know, that could be, you know, a non-physical asset. It can be anything. It could be water. It could be, you know, gold. And I think going back to what I said before, it could be like a case-by-case basis. You know, back to your point, I think it's best practices. At the same time, I think as council, we have to be aware that speed is key with you know, with our companies. Like, they move fast. They're trying to, you know, build out things fast, scale fast. So I recommend best practices. It takes a lot of, you know, thinking beforehand and trying to anticipate what the next move in, you know, the company you work with, you know, what's the next step? how can I, jump in there and raise, raise these flags and have some sort of a solution,
Yeah, in my view, I think the problem is that in spite of the best intentions of the regulators or not, they will have a hard time figuring out the right way. One, because they first need to understand the technology. Two, because they have a lot of political issues to deal with at the same time and all this. I think one interesting approach will actually to go through more of a industrial kind of conduct and actually identify what are the ways in which we can design those ICOs and potentially how we implement specific technical devices that might actually comply with specific regulatory objectives and actually have these bottom-up self-governance structure that comes from the industry, because the players are the best one to actually, if people understand the regulation and we understand what is the objective, what was the intention of a particular rule, and if we can figure out how we can actually design the ICO and how we can design the structure around it so that we can actually protect the investor, so that we can actually comply with the various intentionality of the regulatory framework, then it's actually providing a way for the regulator to look at this and actually see, well, this seems to be working, and then perhaps we can more easily endorse those particular practices, or perhaps we can inspire the regulation to say, well, if you do actually implement those specific technical guarantees or those specific models into the ICO design, then perhaps you might not be required to comply with all the formalities that are usually to be complied with, and therefore you, as the regulator, you can actually kind of open the door and actually invite people to come up with innovative solutions that will will eventually achieve the same objectives, and providing the incentives for people to find those solutions, because it's going to reduce the regulatory burden that they will be otherwise subject to.
As I said earlier, as long as the objective is also to mitigate your risk, it is better to go, if you have a doubt, if you are in kind of area where there is gray zone, especially in the financial matter, it is always better to see the regulator, because if you, at the end, if there is a decision or if there is a position that you are regulated, and if you do not comply with the rules, if you launch a project and then after there is some more requirements you are not complying with, the regulator will not see you the same way if you anticipate or if you go afterwards. And there is no issue about discussing the regulator, then obtaining kind of comfort if you are not so far so good. And if you have to comply with some rules. So if you want to sleep at night, go to the regulator.
Thank you all. That was it for my questions. I don't know if we have some questions from the...
Can I just say one thing too? If there's one thing I've learned from my experience and would just like to impress upon all of you, from experience, my crypto was a, not this case, because they had counsel. It wasn't a good fit. I think with my company, there's a certain pace that you need to stay with them. We move fast. We are always working, but seek counsel early. Don't come last minute, and don't come, lawyers a lot of times we clean up the mess. And while there was a mess when I got into it, it wasn't their fault. Come early, and see if you have an issue. From my experience, I don't know the rest of the panel, but I really love the crypto community, Ethereum community, but there's a little bit of like, the lawyer, it's going to slow it down. Oh, we have this, great idea. Here's the fucking lawyer, Well, we're not that, We're here to do our best to give you that predictability. We're here to do that, but we want you guys, to have an awesome company, $1 billion company, more than just an ICO. Like what, all the talk is ICO, but what happens next, so the sooner you speak to us, the better.
Thank you. I think there was a question there.
Thank you. So I wanted to share my thoughts about looking at how this is working. And I'm feeling that, first of all, when we're talking about regulation, about ICO, it seems that by default, the first thing that you want to avoid is looking like a security, right? So in fact, the game is do not look like security, and everything revolves around that. And I wonder if this is not something which is restricting innovation in the way we can fund projects or economy, because we want to avoid that. And I think that no regulator is looking at why those people do not want to play with the security rules. Isn't it another set of lower constraints about securities that could be applied to this kind of project? So I think that right now, if I'm losing $10,000 through a utility token or through a security token, I lost $10,000. And I think that I have more guarantee if it's like a security than like it's a utility.
Any reaction to that?
Yeah, you're right, but the constraints, the initial constraints are not the same. If you're issuing a token which is not a security, you have a regulatory framework you do not have to comply with. You have only best practice. If you're falling within the security definition, then you are falling within the classical regulation, and the investments and the way you have to structure to issue this security is much more complicated, and potentially you will not be subscribed the same way, because you are at the very, very early stage of your project, and venture capital potentially will not look at you.
Yes, I agree, but that's the thing, is that right now the constraints are too high, so people are trying to go on the side of the system. So isn't it time to eventually say, hey, maybe we need to have less constraint on some projects and having kind of a, I don't know how to name it, but kind of security, but with less rules on it, like for the ICO, because at the end it's public money going to entrepreneur or to a community, so the risk is there.
The question is what are the rights granted to the token, in fact. If you are a security, you will have a vote, a right of vote, you will have to provide dividends, and you will have to fall down with the regulation when you will have a reporting, when you have to comply with a set of rules which are much more painful than if you have a utility token without complying with all the security rules, and then you have a promise of offering a service or a product without an obligation of results. You will not have potentially to redeem if you do not come to the end of your project, which is if you are not deploying the protocol or the application or your platform, and then your constraints are less with a token than with a security, and your liability is less too.
And just a quick add to that, I mean, at least in the U.S., I mean, you could say almost any utility is a security if there's some sort of investment. If you're trying to trade that on an exchange, if like, let's be real, like, I mean, most of the time people are trying to get on these token issuance so they can pick it up to make some sort of profit. So if there's even a little bit of that, it's a security, So, I mean, I think maybe a lesser constraint framework would be great. I mean, is that going to happen anytime soon? I don't think so. It's just,
If I can add to this, I think that it's actually the big problem is that because people are trying to escape from the qualification of a security, they are actually stripping down pretty much every utility to their token. So you just end up having like this empty utility token where the utility is actually quite artificial, and because anyhow you're selling it as part of an investment contract, it's still gonna be a security. So you just end up having like this really useless utility token that nonetheless qualifies security. So the incentives are actually quite misguided. Like all the startups or all the projects are trying to escape from something, but by the mere fact of trying to escape, they are actually reducing completely the utility of the platform or the token, and because of that they are falling back into the security anyhow. So I think the main issue, and especially from the US perspective, because in Europe it's slightly different, but the problem is that if you're selling a token before the platform exists, no matter what, you are actually doing an investment contract. So either you have to postpone the ICO after the platform has been built, and therefore because even the utility is not sufficient. Having a utility token that is not yet functional will not actually be sufficient. So I can design the best utility model for my token, but if the platform has not yet been built, it's still not gonna qualify. I mean, it's still gonna qualify as a security. So I can have a perfect utility token which also have the characteristic of an investment. And in that case, so I think at the moment in the US, unless you have an existing platform, whatever token you're gonna sell is gonna fall within the Howey test.
I have a question. I hear in France there is kind of entity called Société Coopérative, SKIC, I think, and it seems to fit quite nicely with the community character of blockchain communities. I don't know if that could be a solution for a legal incorporation.
Yeah, this is a specific type of company. Arc ecosystem is the first word. Is the only one in France, a kind of cooperative. But it can work because it is not a pure business project, And when you have a kind of open source code, when you try to provide your how to say that. You are offering the services to a lot of people without the main objective is not to make money, and you have a kind of specific status, but which is set up like a commercial company, but specific governance rules, specific organization, which is not adapted to all the projects. It is not an association, it is not a foundation. It is a commercial company, but with a very specific setup, with a very specific organization, which is not adapted to everything. So it is really it is a good process for a cooperative, open-minded, and non-full business company, in fact. Well, I'm not being very clear, but it's a very specific process.
So maybe the most important thing with the SKIC is that it's a cooperative structure. So you have this the thing where everyone has an equal voice in the governance if he's an investor. Yeah. And there is also the Avatar project, which is into the SKIC structure in France. Is there any other question?
Saying that all utility tokens sold before the platform exists are securities seems very broad. We already have pre-sale type things in the real world, like pre-ordering a book and so on. What distinguishes those from a security if utility tokens sold before the platform exists are securities?
There's some expectation of profit, right? Like if you buy a token and it changes in price, and if there's any sort of expectation there, arguably it's a security,
So that seems to be the general expectation of people now, but at least originally the idea was, well, you're actually just buying gas to use in the system once it's out, not, and you're helping us with a Kickstarter type, I'd say investment, but in the acknowledgement that you get some of the proceeds, a fixed amount of the proceeds. So if that's honestly your intent, does that still make it a security?
So what you need to consider is the intention of the purchaser at the point in which he's purchasing the token. So for instance, and this is an open and unresolved question, is in the case of the SAFT, right? So the SAFT is you sell an actual investment contract. So the SAFT is defined as an investment contract, And this is a promise that you will actually obtain the token when the token will be issued, right? And the thinking behind it is that in that case, the token at the time of issuance will not be a security because the token will only be issued when the platform exists. And this is an interesting model. Now, there is a lot of controversy around it on the fact that can you actually just artificially create this two-step process and pretend that what I purchased, even though the object of the investment contract was the token, and therefore claim that just because I'm waiting before issuing the token, at the time in which I purchased the SAFT, did I not actually have in mind to actually purchase the token? And so, of course, we don't know because there has been no big decision at the moment, but there is a huge amount of controversy and a lot of lawyers in the US and abroad that claim that there is no way the SEC will actually consider the SAFT not to somehow contaminate the token that will be issued at the time, because I purchased the token through the SAFT. So the SAFT is just the medium by which I actually obtained the token, and that doesn't actually protect the token from not being a security. So what you really need to look at is not necessarily when is the token being issued, is what was the intention of the purchaser when they actually made the transaction. So if I purchase the SAFT today because I'm expecting to gain whatever profits, expectation of profit on the token, the investment contract of the SAFT will contaminate potentially. We don't know, but that's a possible, maybe likely outcome.
Thank you.
The other issue is linked to the fact also that the token has two functions. You have the use in the platform will be set up, which is quite the reason why potentially you could have invested, but at the same time it is listed. And 80% or 90% at the first stage, early stage of the ICO, people are subscribing to trade and to try to optimize. When this trade is not, I didn't purchase the token to use it when the platform will exist, only for trading on the exchange 2 seconds after the subscription. And there it is very difficult to say it's not security in this situation. But in France, it is quite different because the OWI test is not based on the same criteria. It's not so restrictive. So all the ET tokens are not potentially securities.
There's been now quite a few ICOs and even in France, and I was wondering whether you guys see a trend towards a professionalization of the investment into tokens, and now like professionals in that kind of investment activity, and with maybe terms and conditions that are starting to become usual in that kind of activity. Are there already in the landscape a few like investment funds that are specialized or that actually do perform investment in ICOs?
You begin to have some bridges between this innovation world and the classical one. You have some investment service providers or you have some asset managers who are looking very closely to that. They are advising ICOs or they want to set up specific funds, regulated or not, in which they could invest in ICOs. And the classical world is now looking more closely to this, and there is a professionalism with this new, I would say, wave, but you still have some ICOs on the process which are not performed with the classical legal documentation which is needed. So you have everything, but normalization will be much more helpful for everybody as far as you have classical players who are regulated and you are interested in. Because if you have asset managers who are regulated and submitted to a specific regulation interested in, it means that they are going to be more professional, and that it means that the players who are not very serious will disappear, will remain only the most serious one, which is, I think, a good thing if you want to make this growth in a legal environment. You have venture capital who began to say, I'm interested, and then we need to focus on how we can read this type of model of investment, which was not possible in the past, because at this so early stage of financing, last year, for example, the venture capital were not looking at this, saying, "Oh, can I read this? I don't have any shares, I don't have any receivable, I don't have any claim. If there is no launch of the platform, if they are closing just after the ICO, I have no rights. And then, can I justify my investment in this kind of project?" Now it is a little bit different. So it is more professionalism.
Okay, so I understand there's room for my next question, which is basically if there are a few professionals in the landscape already, then I assume they are starting to organize their investment and to secure it. And because what bugs my mind with this ICO thing is that when a few professionals make an investment into an ICO, then they're going to be willing to make something like some kind of shareholder agreement to, you know, to regain the kind of protection that you gain through that into an ICO. But can you see this coming? And would it actually, is it possible to do that?
When you're talking about shareholder agreement, it is because you consider the security is an equity token and you have the right to have a share, which is not the case for most of the projects.
Well, let's assume that it is sometimes.
You have a kind of professionalism because you have post-ICO audits when you can organize the fact that you can secure the project by avoiding the take the money and run, by implementing some compliance process to give more comfort and visibility on how it's going to be deployed, how the funds will be used, how we can report on this, but there is no shareholder agreement as far as there is no security. You are not taking a part of the issuer.
I will also add that it's actually, even though it's the same player, they are actually not necessarily playing the same game. And most of the investors that are actually going into ICOs, they're actually not at all interested in getting anything close to equity, quite to the contrary. They actually want just a token that is super liquid and that they can resell very soon. And in fact, we can actually see some investor that, like some venture capital that invested into some early blockchain startup that now are actually asking them to do an ICO just because that's the very easy way to get the liquidity event, which is much faster and much more liquid than any kind of equity event. So the traditional investment player, they really, it's not as I'm investing in a startup and then I'm gonna help it and I have this more long-term vision of the startup growing and scaling up and then eventually going public. It's actually just, I think this might be an interesting investment in the short term and I'm just gonna purchase token and I don't want the equity that goes along with that just because I wanna resell the token on the secondary market.
Okay.
Maybe one last question because we already...
So I've heard a few times in this talk that basically France or X country has more lax regulations on ICOs than the US. Why do you think that's going to matter when you're selling your tokens to general public in the US? The US is like a very good habit of coming after companies in other countries. Like, why do you think it's going to matter? Like, what protections do you think that these companies are going to have because they set up somewhere else and then sell in a different country? Like, why if you set up in France, they have more lax laws for the ICOs, yes, so your company's a little bit protected because you set up here, but why when you set in your ICO, like blockchain's global, anyone can get into these ICOs. Why is it going to matter when you have a class action lawsuit that's launched out of the US against a French company? Like, the US loves to go after other companies.
I mean, most ICO actually block the US.
Well, block.
You are excluded. You are excluded offering of the token for U.S. citizen, and in the United States, and there is no promotion. There is nothing in the U.S. because also of the risk of extraterritoriality of the U.S. law.
So how do you advise a company to block that? Because like the way the VPNs work, and like basically I can live in France and live in the U.S. like just over.
So far, well, in the legal documentation, you have some wording saying that it is not dedicated for U.S. citizens, and you have other countries like this. For example, last September, you could have South Korea where they say we are going to ban ICOs. You have also China, but it's not sufficient. You also advise on the fact that they do not have to answer a question from U.S. citizen. If they want to subscribe, they have to exclude U.S. citizen, even if we know that technically speaking, you can hire exactly. But you do your best. You do your best to show to the regulator and with the legal environment that you are excluding the US citizen and you are not promoting in the US, you are not doing meetup in the US, you are not offering and advertising in the US. With all of that, you try to have a kind of secure environment for this.
Yeah, and I mean, to add to that, I think this is where, the crypto community, you guys can get around these things. At the end of the day, we do our best to provide as much protection and show, in good faith we're doing the right thing, but sometimes you can't. By the way, that was a great question, Kevin, who's president of MyCrypto.
Hi. Yeah, I'm a teacher of legal English down at the University of Bordeaux. So I'm just wanting to know, what sort of advice would you have for future lawyers who want to get into the crypto space, are interested by the crypto space?
Now, it's very interesting because I think it is better to know the regulation when you want to go afterward in a non-regulated environment. It is much more easier because you have, I think, some reflex. If you do not know this regulation, you do not know how to manage the absence of regulation. If you are from a pure non-regulated activity, you want to do some crypto, what will be how would you like to know the regulatory environment you potentially will face in the future? So it is better to be a regulatory lawyer and then not applying a kind of regulation instead of not knowing a regulation, and you are in a complete blind people, in fact, for this.
And just a quick add to that, I think, Taylor says it best, like nobody, studied this right now, right? Like, we all got into it some way or another, and I think just being very interested in the space, I think having the security background is would be an excellent first step, but I mean, people need to, she calls it falling down the rabbit hole, like find that thing that sends you down the rabbit hole and gets you deep and gets you into the details of this space, because I memean, I truly believe there's something that appeals to everybody in the space, so I think it's just finding that incentive.
Last month, I hired an associate who will potentially deal with these kind of issues and these kind of clients, and I receive about 20 CVs, resumes of people saying, I have a wallet, I'm very crypto friendly, and I have my Nano, I bought at Ledger, and then I'm very, very interested because I have Ether, Bitcoin, Ripple, and all of this thing. I said, yes, okay, and what about the real life and the regulation? And on the other side, I have 2 or 3 people saying, I come from asset management environments, I come from banking regulatory environments. I know that it's not regulated, but it's going to be regulated. Then I prefer to have this kind of profile. Also, the crypto community guys who came there say, okay, it's very interesting, but it is very dangerous too.
I think we'll close the roundtable
just
now.
one question, if possible.
One more?
Yeah,
Okay.
one more, or 2 more.
One last.
Sorry. Negotiating. So the first one is, do regulators try to build a new framework for those tokens, or try to fit those tokens inside existing frameworks? And the second is about compliance issues. So I think you advise ICOs to do KYC, but are there any other best practices that you advise them to follow?
I think we understand the first question, but not the second one.
The second one is about compliance issues. So KYC is, let's say, mandatory, but are there any other best practices that you ask them to follow?
You have a consultation paper from the IMF who was launched in last October with, and who was closed last December, end of December. And then you have a regulation which is under preparation. We have no certainties, and I think we are not at the place of the regulator for this, but as I said earlier, one of the options could be, okay, to officialize the best practice which are used so far in this ICO environment in France, and then get a specific approval, a stamp, a visa from the IMF for the project who will comply with this. But there will be no potentially ban of the project. We will not comply with this best practice. This is something which is under discussion. There will be in the future, potentially before the summer, political, I would say, discussion which could completely change this kind of projects. There will be potentially also the setting up of new players with a specific agreement, specific authorization, as far as they are acting as intermediary and offering a kind of economical rights in the future or potential investments. And there you have several options. We do not know so far what will be the results at the end. There are a lot of discussion. You have a lot of working group in professional association trying to lobbying, trying to establish and publish report on the matter to inform the regulator properly. But potentially it will be done before summer. After all, I'm not the regulator. I don't speak for them. And this is just under a process. The second point was about KYC and compliance.
Yeah, compliance advices.
Sorry?
Compliance advices.
KYC is a real issue in France, a real issue, because there is a submission to money laundering regulation. When you are talking about ICOs, you have to take your crypto, you have to put them in an exchange to change into fiat, and you have to go down with the fiat into the account of the company. And the service provider dealing with KYC process for ICO do not potentially collect the appropriate information or do not have the technical means to collect the appropriate information which will comply with the KYC process of the banks. And then for all of the ICO I'm assisted, there is always an issue with the bank when you are come down in fiat in the account of the company. They are all blocking or closing the accounts or saying, no, we will not let you do, because the KYC is not satisfied. In addition, there is also a lack of information from the exchange to the banks, because the nature of the information which is collected by the exchange is not provided to the bank when there is the need for the bank to comply with their own KYC process. And then this is a case of case-by-case basis when you have to negotiate with the bank saying, look, I've done this KYC process, we try to satisfy, and what I'm trying to do, but it's not very easy because compliance of classical banks are not very keen to share on this, is to try to implement at the ICO level the KYC process which will be needed by the banks so that you have a smooth relationship from the top of the ICO to down in the bank. But it's not easy because for most of the bank, when you take a selfie with your ID, it is not a document which is a tick the box in the compliance book of the bank. For some of the banks, you can use that. For others, and for many others, it is not possible. And then you have a real issue because all of the project, if they do not collect fiat during the ICO, they do not know easily how to transform that and to run a company properly, paying people, paying dev, paying renting purposes. It's very difficult to manage afterwards. And I don't have a solution.
Can I ask like one last question before we all leave?
Sorry, I think it's too late right now. Maybe just meet the speakers afterwards, sure. So we have technical team there, so they need to. It's the end of the day. Thank you very much. Bye bye.